Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver sandbagging may not be over yet, meaning this silver price may drop even lower. This article is going to explain what's going on with silver's price, where you should be in your investing strategy, whether you're buying, selling, trading, or holding, and that's why it's so important to subscribe to these channels like this that inform you on a day-to-day basis. I am busting my butt on a day-to-day basis trying to give you guys the freshest, most up-to-date recent news, what's going on with silver prices, so you can invest successfully. So anyways, the link to this article will be in the description, so let's jump into it. Silver and the PGMs have been big sufferers among the precious metals market meltdown. So, there could be even more grief for investors to come as things could get worse before they get better. Gold is down sharply too, but not nearly as much in percentage in terms as the industrial focused precious metals. So they're saying that yes, gold is down, but silver's down to extreme levels. Silver thus looks extremely cheap at the moment. At some stage, it becomes an out buy, but that time may not have arrived. You could still fall further. So you might want to hold off because there still might be potential. There still might be potential to fall for the prices to fall even lower. So I did skip a part, so I'm going to start up here. So the disparity between silver's performance and gold can be demonstrated particularly strongly by this ever-seeming gold to silver ratio. So gold to silver ratio is how many ounces of silver it takes to equal 1 ounce of gold, which has reached a near record high of around 122 to 1 as I write. That is crazy. That is actually crazy. That's the highest it's ever been. So, thus a high gold to silver ratio and a weak gold price is happening at the moment. It's particularly disastrous for the silver investor. So, we would not be all surprised if the metal price falls to around $10 an ounce or even below before it starts to recover. So we might see $9 silver before prices start to really catch back up, ladies and gentlemen. Currently, it's at its lowest price since the great financial crisis crash recovery in 2009. But perhaps one should bear in mind that in the depths of the 2008 price crash, it fell to as low as $9 an ounce before it started to recover. So we've seen this before, and it has been here before. Much will depend on the overall market sentiment. The equities markets are providing huge volatility, with the Dow down almost 3,000 points yesterday. The Dow is down almost 3,000 points. It seems to be making a bit of a recovery today, but it remains down 30% from its all-time high reached about 3 weeks ago, and it's hugely erratic in its price movement since, as the precious metals too. See, we saw record-breaking highs not even 3 weeks ago. Now we're seeing the lowest price in several years and decades. That is crazy. As a silver investor, you have to have faith and hope, and you have to be realistic. Realistically, the markets will not crash down to zero. That's just not how markets work. That's never. Gold and silver have been valuable for 6,000 years and always will be valuable. So you don't need to worry about that. More worry needs to be coming on what's your decision making in this. Where are you buying, selling, trading, or holding? Because that's going to affect how much profit you make or if you go into the red. So the huge movements in the markets are very much COVID-19 related. The down days relating to the consideration of the enormous effort to control the spread of the virus are having a global domestic economies, while the days to tend coincide with consideration of government and central bank largely designed to mitigate the effect on business. Given that the virus news is likely to get worse before it starts looking to get better, we assume the equities and precious metals too may yet see the more serious downturn. So since we still don't know to the extent that things are going, if things are going to get even worse before they get better, that precious metals might see even more red. Now, gold is in the green slightly. It's up 0.88% on today, or almost up 1% on the day, but it still is looking downwards. We're still in a very bearish market. But I am curious when the gold to silver ratio is going to start correcting, because right now 120 to 1 is way too high. 120 to 1 is way too high. Way too high. So we would thus not be surprised to see equities fall by 50% or more from their peaks before all this plays out, and the fate of the precious metals probably lies in what needs to be sold off to keep funds and individuals solvent, given the huge volumes of equities which they will likely have been bought on margin. One should also not forget the banks and precious metals traders who have been short selling the precious metals have been faced with huge paper losses amounting to billions of dollars when the precious metals prices were rising. The price downturn will have been their saving, and they will probably have had a hand in the price falls too in their activities in the futures market. So they're saying that people that lost money are trying to recover the lost money, which could in return make even more money lost. In a weird way to put it, but it's true. And right now, a lot of people are trying to have shorts, do this marginal trading, short selling, because they've lost so much money. They want to try. It's gambling at this point. It's extremely risky. It's extremely risky, and you need to know the risks involved. With great risk comes great reward, and you possibly could make up some of that money, but there's also a great chance that you lose a lot of money. So, the likelihood for further falls in the main equities indexes is supported by just published research from Goldman Sachs predicting 0 U.S. growth in quarter 1 and 4% contraction in quarter 2. 0% growth in quarter 1. The bank also suggests the S&P 500 could fall as low as 2,000, nearly 40% down from its recent peak. But banks tend to err on the side of the conservative, and we feel the decline could be even greater. Indeed, China has just reported a far steeper downturn so far this year analysts had been expecting. Worse than that experienced in the 2008 financial crisis. We reckon the US and Europe could be even on an even more perilous path. So we're talking about something that's worse than the 2008 credit crisis. There is even more things on the line at this point. Because not only is it just the credit crisis exposing the debt that we're in, $24 trillion in debt that we're in, exposing the inflation rates from hyperinflation, pumping these worthless dollars into a system, but we also see COVID-19 killing people and spreading rapidly. It's a pandemic, so you also have this other variable that's making things even worse on top of it, and we still don't even know how much worse it's going to get. So there will come a time for bargain buying of equities and of precious metals, but depending on the course of how COVID-19 impacts, that time might be yet weeks or months ahead. It is always difficult to predict a bottom, but this time there's a good indicator relating to the perceived control of the COVID-19 outbreak. When new cases and deaths start to turn down in Europe and North America, that time may be to act. Meanwhile, be very afraid, definitely a time to err on the side of caution. Now, I'm not trying to say be scared. I don't want to instill panic upon my subscribers, my audience. I want you guys to look at these things realistically, right? We are realistic investors. We step outside of ourselves and we look at the bigger picture. We look at the emotional attachment and push that off, because that's how you can screw our thinking. That's how irrational thinking, that's how impulse buying, that's how panic selling comes into play. And we're not doing that right now. We're not doing that. We're going to look at things realistically and just look at things for what they are, taking it one day at a time, because if we try to jump too far ahead of the game, we will be making we'll be making wrong decisions. We can look at the historical patterns from before, apply what's happening in the economy, and look at if it's a good time or a better time to buy, sell, trade, or hold. But I am curious to see what you're doing, because that's just my opinion, that's just my perspective. Silver stacking especially is a very individual investment. It depends upon person to person, so you might have something else you want to do, and I'm curious to hear what your side of the fence is, what your game plan is, what your strategy is. Now, what is it? Are you going to be panic selling right now, which I highly doubt anyone is, especially my subscribers, because you guys know what you're doing. Are you going to be buying right now, taking some positions into these low prices, or are you going to hold off because prices might go lower down to that $9 range, even making it a better time to buy silver? So what are you doing? I'm really curious. Anyways, the link to this article will be in the description. I thought this was a great article just explaining the reality that we're in. You know, this is a real subject, and I'm glad I found this article because it did explain a realistic approach that not many people are talking about right now. So anyways, thanks for tuning in this video. This was Silver Slayer. Make sure to smash the like button. Make sure you subscribe if you're new because I do post daily videos. I'm out. Peace.